movers and shakers today. Krawcheck has been picked to run the bank's global wealth management group. She joins Bank of America from rival Citigroup, where she most recently ran Smith Barney. Now, she left Citi in September, reportedly because of clashes with Chief Executive Vikram Pandit. Joining Bank of America puts Krawcheck in line for Ken Lewis's job, along with 4 other executives. Our other mover and shaker today is Robert Ben-Moshe. The former MetLife CEO has a new job title, AIG President and CEO, and that is starting Monday. Ben-Moshe was also elected as a member of the board of directors. He faces a whole lot of challenges with AIG trying to repay their loans from a $182 billion government bailout. He'll be replacing Edward Liddy, who is retiring. Now, Liddy says Ben-Moshe understands the challenges and opportunities of restructuring complex organizations, and this, by the way, will be AIG's 5th CEO since 2005. At this moment, we are standing by now for data, personal income, spending, and inflation numbers. Personal income expected to be down by 1%, according to the Bloomberg survey. And here those numbers come now, off a bit worse than expected, I should say. Personal income down by 1.3%. As I'd mentioned, the expectation was for personal income to fall by 1%. Spending, though, taking just slightly higher than expectations, up by 0.4%. For the PCE deflator, which is somewhat a gauge of inflation, down by 0.4%. The expectation was for a gain of 0.2%. Taking a look at the market reaction right now, equity futures still sliding, though. You can see down by 0.8% after the S&P rose above 1,000 yesterday. For treasuries, had been gaining before those numbers and still holding on to those gains, rallying on the 10-year and also for the 2-year. But I want to bring in Mike McKee right now because he's been sort of breaking down those numbers and seeing what's behind those headline figures that I just gave you. Mike.
The numbers are a little off from what economists had forecast, Betty, but they're not really a surprise. Last month, we saw an outsized gain of 1.4% because the government, as part of the stimulus program, sent out checks to Social Security recipients. So you had a 1.4% gain in overall income. But the trend has been bad, and it continues in terms of compensation. Wages are down. Once again, we see a drop in wages and salaries of 0.4. That's I can't even count. It's more than a 6-month drop in a row here as far back as my table goes. And for the year, we're down 4.7%. So your incomes are lower. People are going to be spending less. The big jump last month in Social Security payments also helped push the savings rate higher. So with that backed out now, we're back down to a 4.6% savings rate, much better than the 0 or negative 2% that we saw in the late 1990s. But it's still a disappointment. Economists have been looking for people to rebuild their savings, pay off their credit cards as the economy weakens. That's happening, but at a much slower pace than people had thought. So it looks, Betty, as if that this is an overall disappointing number. People's incomes are not going up. The government special transfer payments aren't there, so the savings rate goes down. Spending rises maybe just a little bit, but it's not something that economists are going to see as sustainable.
And you are seeing that, Mike, reflected in equities, as I'd mentioned, still holding on to those losses from just a few moments ago. Also, Bloomberg News is reporting that PepsiCo is near a deal to buy two of its biggest bottlers, and John Ehrlichman monitoring this breaking news. John. Okay, so actually he's standing by. He's still crunching those numbers and that breaking news on Pepsi bottling. So instead, we're going to turn to another story. The Cash for Clunkers program sharply boosted July sales, and new statistics are out from the U.S. Department of Transportation that could bolster the case for politicians, dealers, and also automakers who want to add $2 billion to the program. Greg Miles has been reporting the story and is here with me. And Greg, what statistics are you exactly talking about?
You know, I'll tell you, Betty, when critics came out initially when this program was initiated, they said, look, it's only going to increase average miles per gallon by about maybe 1, 2, 3, 4 miles per gallon. Here we are. We got these numbers out from the Department of Transportation. Okay, you're talking about the cars that were traded in had an average miles per gallon of 15.8. The cars that they bought, or vehicles, were 25.4. That's an increase of 10 miles per gallon. That's an increase of 61%, all right? Now, this could dramatically reduce, any opposition or a lot of opposition to extending this program. And the Senate, even Dianne Feinstein, the U.S. Senator, she was opposed to it. Now she's for it. Let's listen.
Are buying more cost-efficient vehicles. And after hearing the figures so far, I believe, and I believe Senator Collins, who will speak for herself, also agrees, that the best solution is to continue and extend the program as it is.
And just think, Betty, this really could dramatically reduce the monthly gas bill for people who bought these cars.
Indeed, which was a big concern last year for people. Okay, so would extending this program, though, extending it by $2 billion, is that going to have as much impact as the first billion?
You know, we really don't know, because a lot of analysts have said really that a lot of automakers' inventories were dramatically reduced, okay, because of this just huge surge in the past week. So some of the automakers are actually going to have to increase production, actually, to make enough cars to supply demand. It's unclear whether you can do it fast enough, though.
Okay, Greg, thanks. Greg Miles on the Cash for Clunkers program. And as I mentioned, that John Ehrlichman was looking at that Pepsi bottling story, and he is there now. John?
Yeah, can you hear me, Betty? Let me just give you an update on the performance we are seeing in these shares of Pepsi bottling, rocketing ahead of more than 6% in the pre-market, above $35. Bloomberg reporting this new deal, $7.8 billion, that Pepsi bottling will get $36.50 a share, half in cash, half in stock. Pepsi America is also getting an increased offer. $6 billion was the previous offer. I just want to give you a little bit of very quick context on what the M&A arbitrators were watching. The fact that because of the rally in the stock, we were basically below this zero level in the premium, so there was no premium in the stock. As a result, we were expecting you could see a higher offer. Pepsi shares also higher in the pre-market. Betty, back to you.
Okay, John, thank you. Well, Ed Whitaker meets with GM's board today. His first big test as CEO, what to do with GM's Opel brand. That story and many others when we come back.